Hey everybody, what's going on? It's James here with Crypto Common Sense, and I have a Bitcoin / cryptocurrency market update video for September the 1st, 2021. So it's been maybe a couple of weeks. I don't really know when the last time I did a video was, but it's been a while. So I wanted to sit down today and do a video, kind of update everybody on my opinion of the market. It's just that, an opinion. And I want to talk about what I see coming in the future. Before I jump into the content for the video, please do remember that I am some guy sitting in a spare bedroom, which means that nothing in the video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, or precious metals. Also, make sure to give this video a thumbs up and make sure to subscribe to the channel if you have not already. And of course, make sure you check the description for links where you can join both my Patreon as well as my DeFi training course if you'd like to learn how to trade DeFi tokens. All right, so let's talk about the market and why I haven't done a video in a while. Well, it's simple. Back in May of 2021, over 3 months ago at this point, I posted this chart up on all of my social media channels. This was a chart that I drew up marking out what I felt like was the market cycle. Now, I had tried this once before, well, I tried it lots of times before, 2018, 2019, etc. But in this particular cycle, I did think back in January it was possible that this was actually going to be the top, that this would be our first move down, our complacency bounce, and then more downside. I had the timing wrong, so I redid this in May and said, look, I think this is probably the top, and drew this chart out. Now, whether it was the top or not, we do not know, and I'm going to go into that in more detail in just a second. But this is the reason I haven't done any videos, because what I was expecting in May was a move from around 30K back up to, if you could see this box, it might be kind of tough, but this was right around 50K, okay? In fact, more specifically, I was expecting probably 45 to 49K. If you look at the following picture, here's the exact same box, drawn in the exact same spots, with the bottoming at 50K, and there's the move up from 30K to 50K. Wasn't a whole lot of reason to do a video because it was doing exactly what I predicted that it would do. Now, some people are still following this chart, and some people are still saying, okay, this is complacency. I'm going to go, completely wild. I'm going to short this thing into the ground. I'm going to sell everything I have, yada, yada, yada. I'm not, okay? I'm not doing that. So let's talk about the charts, and I'll tell you why I've kind of tempered or pulled back a little bit on my bearish stance, thinking this was the market top. All right, so if we take a look at this monthly chart, we'll start here and we'll work our way down. And I want to say, first off, I'm not bullish. I'm still pretty neutral. If you put a gun to my head and say, give me odds, right now I'm probably 60-40 to the bearish side. So I'm slightly more bearish than I am bullish, but really more than anything, I would consider myself more neutral, right? And there's a very simple reason for that. This market structure is very different. So we're going to go through each time frame, and I'm going to kind of talk about this. First off, this is a monthly chart. What I want to actually do is put this on a BLX chart so we can look at a longer history of Bitcoin. So we'll take away the volume for just a second. All right, so what we saw was we just saw this monthly close. We had two greens, we had the move down. If you remember back in May, I was talking about how this was probably going to be, 3 was kind of odd, 4 would be very unusual, and we'd probably get some kind of dead cat bounce. That's what this was looking like, but now we've put in 2 green candles, monthly candles. Well, if you look at the 2019 Echo bubble, we never did that, right? The only time we put in 2 was after the bear market or after the Echo market bubble was over, right? It started back up. If you look at the 2017 or 2018 bear market, you're not going to see 2 greens until that drop was over. If you go back and look at the 2014 bear market, you saw 2 greens right here, but the second one was more of a, kind of a neutral candle, if you will, and then more downside. Go back into the little, what would you call this? Maybe like a micro bubble, I guess, in the summer of 2013. You got 2 greens, but that was because the bottom was in and up it went, right? My point being, here's the bubble in 2011. You got 2 greens, and that was it, right? You're going up from there. So the point I'm making here is 2 greens, not supposed to happen in a bear market, right? Not supposed to happen if this was the market top. Could it happen? Absolutely. Okay, it could. But that is something that I think that even if you're a super, super bearish guy or girl, I think you got to admit that's weird, right? That's really, really different from what you would expect. That's the first thing I noticed. Let's go back over to a USD chart. We'll use Coinbase because it's the most popular US exchange, right? Take everything off of there except volume. here's the other thing that's weird about this, okay? So if you want to be a bull, then you look down here at the volume and you're like, where's all the buying volume at, right? This is not a lot of buying volume. So that's weird in the bull side. Well, what the hell, right? I mean, there's these mixed signals there. That's kind of what I'm saying. I'm neutral. It's weird. If you'll take a look at the fibs, right? This just missed the 61.8. So that's more bearish than anything to me. But if you take a look at the fibs from March of 2020 to May of 2021, the move down just missed the golden pocket, the long 61.8. Again, weird, right? So I just don't know. I don't know. This monthly chart is weird. If we zoom in and we take a look at a weekly chart, let's find that real quick. This is my weekly. This is my weekly. Okay. So we were in, let's look at price action first. We're in this downtrend. Everything is nice and smooth, moving down. You got your two touches down here. You got a touch up here. You would expect it maybe to stop somewhere in this zone. So far it has. That's at 45 to 49K zone. But we're seeing tails instead of wicks, right? We're not seeing wicks shoot up and then bears push that price back down. What we're actually seeing is bears try to push it down and bulls are pushing it back up. Very, very weird if this is a complacency bounce, okay? Looks more like a bullish type of price action. We're also above this 19-week moving average, which is bullish in nature, right? And it's starting to try to curl back up, which again is also bullish in nature. Very strange stuff. If you expected this to go down, right? That's not what you'd want to see. If you look at the volume, put the volume on there, right? One thing about the volume, it's really bad. It's not good volume, right? It's kind of dying off. So maybe this is just a pump that's getting weaker. But on the flip side, a bull could say to you, well, yeah, but look, the little bit of, the one red candle, there was almost no selling volume. I agree. It's a neutral type of thing. There's no real definitive answer there. We're sitting here at the top. About 2 weeks ago, we pinged and closed right at the top of this channel that I drew back in probably March or April maybe, right? Came right back up to that, stopped at it, but we're outside of the bear market box. We bounced right off the bottom of it, just like I anticipated we would. So this is weird, because on one hand, it's kind of like, okay, well, you're sitting at resistance, plus you're sitting in supply. But again, the volume is not confirming these things. This is really a coin flip to me. When I look at a weekly chart, it's a coin flip, nothing more. All right, let's zoom in, go down to the 3-day chart, which of course is my favorite cryptocurrency chart, right? Cool, let's look at this. What do we got? Well, we're coming back up. Obviously, fibs are fibs. They're not going to change, so let's take them off of there, right? We had this upward channel. We had this bear structure come in, lower low, lower low, lower high, lower low, right? So we were confirmed downtrend. But now we've got this, right? We're turning around, putting in a high, higher low, higher high, higher low, higher high, higher low, right? Again, on one hand, it looks kind of bullish, but again, you're expecting this move. You're expecting something like this. So it's kind of a weird deal. If we take a look at the, whoops, I don't want a green dot. I'm trying to double click, so I'm put my RSI on there, right? Volume again, just very, very weak on both sides. If we take a look at the RSI, we consolidated right on the bottom of this bear market box. This box is just freaking money, right? Bounced off of it, came to the top and broke out of the top of it. So now we're just sitting right at this downward sloping trend line, which could be resistance, but it's out of the bear market box. So again, it gives me reason to say I'd pump my brakes as a bear. I do not want to try to take a positional short. That was the goal. The goal was to wait for it to go up to 49K and take some kind of positional short. I didn't do it. I don't plan on doing it, right? I'm going to talk more about shorts in just a minute, why I'm kind of to the point where I don't even want to try to short Bitcoin on anything more than a day trade. I'll talk about that in this video. Here's a daily chart. Take a look at this. So we have this downward sloping trend line, broke through it. That's bullish in nature, right? Had pretty good volume down here on the daily chart on the breakout, so that was looking good. Reclaimed the 200-day moving average. Again, that's more bullish in nature. Came back up, and now we basically have what appears to be this red downtrend or this down parallel channel here that it needs to break out of. That being said, it also had this more parabolic uptrend that fell to the bottom of. Kind of mixed signals there. Sitting right on top of the 200, again, being on top of it's more bullish in nature than bearish, but you really don't want to see it sitting there consolidating on top of it. You want to see it, bounce off and get the hell away from it and show some strength, kind of like it did over here. It came down, hit it, and then right off of it. Over here, it's not really doing that. It's sitting on top of it, and that is a bit of a weakness type of thing in my opinion. So you have that. RSI itself, it did put in a three little pigs setup, which I talked about in previous videos. It's one of the setups that I have taught for free in the past, right, where you've got this long running bearish divergence. It did react to it, fell back down to the 200 moving average, but it's still strong. RSI is still above 50, which is bullish in nature. And again, the volume is kind of it's a 50-50 thing. So again, no clear signal there to me that says I should be shorting this right now. One thing I would tell you to watch out for, there is a pretty nasty volume gap on this thing. So if we put a volume profile on there, we can see that there's a pretty nasty volume gap right there. There's also a smaller one up here. So I could see either one of those getting filled in and it being basically a fake out. In other words, I could see this coming down here to fill this in, faking out bulls, finding support on top of this old zone, and then going north. I could also see it coming up here to fake out bears, breaking out of the channel, being a false breakout, and then heading down. Again, 50-50. I know if you're watching this video, you're probably wanting me to be like, okay, well, are you bullish or are you bearish? But like I said, I really feel like it's more of a coin flip. If somebody put a gun to my head, I'd say I'm 60-40 bearish, but not enough that I'm going to risk my money on it. Not enough that I'm going to try to take a positional short, right? I still wanted to sit down and do the video because it's September 1st. And I think it's important to talk about a monthly close. But yeah, this is just a whole lot of mixed signals, guys. That's what this is. Ethereum's looking really good, okay? Even versus Bitcoin, Ethereum was putting in some really nice structure, right? It had come down, it had retested this old zone. Why is this on a log chart? It had retested this old zone of demand here after it broke through it, came down, retested it, put in what looked like a bull flag, right, or a bull pennant. And if this does end up playing out the way a pennant should play out, right, it's got a pretty nice target way up here around 0.1 Bitcoin, right? So is that feasible? Yeah, it's definitely feasible. Ethereum is looking pretty strong the last few days. If you look at the USD chart, look at this. It hit 61.8. It did retrace a bit off of it, but then it just pushed right up to that 78.6. So Ethereum is definitely one I would watch. Also, one thing I love about Ethereum is how clean the TA is. Watch this. You go back to March of 2020, you draw this up to the peak in May. Where did it come down to? None other than the 61.8. Right there, and right there. Had some really good opportunity to get in there. If you're looking at it from a TA standpoint, you had a boom, 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 boom. You had a double bottom on it. Some people would call it a triple bottom, right? Lots of reasons to get long on Ethereum down there. But again, there's reasons to get long on Bitcoin back there. I had posted that chart up saying it should push back up toward, that 45 to 49K zone. And of course, that's exactly what happened. So if you were playing any of this stuff long, there was a lot of money to be made, and it was okay to play it long, even if you were looking for a bear market. Why would you ignore that opportunity? If we take a look at, what else do I want to look at today? I want to take a look at the fear chart, right? So let me pull that up real fast. All right, so this is, I'm going to actually do this in paint. This is the Crypto Fear and Greed Index. I've done videos about this in the past. I've seen a few other people do videos about this as well. One thing that I do that seems to be different, I haven't seen anybody else do this, I TA this chart. I will put TA on this chart, and I will use this chart to help make decisions. And if you look at this, what we've seen over and over again the last 3 years is we've seen that whenever the fear falls down under 10, that's typically a place that you want to start looking for long positions. Here it was in February of 2018, and right after that we had the huge 100% bounce. Here it was in April of 2018. And if we go look at a chart, let's just do this. Watch what happened on these dates. All right, we'll put this on a weekly chart so it's a little easy to see. All right, so here's February. It fell down right here, had a 100% pump. Boom, boom. Next one was in April, which was right over here. 52% pump, right? Fell back down there. Let's see, this was November and December of 2018. I think everybody knows what happened after that, right? That would have been all through here, right? Pretty good place to go long, obviously. If we take a look at the next time it fell down to that level, well, that was in March of 2020. Oh yes, would that have been okay to long there? I think it would have, right? And finally, it fell down there again in May of 2021. And of course, that was right in this zone here. So those are the places where that fear and greed index fell under 10. And you can see in each one of those cases, here you had 100% bounce. Here was a 52% bounce. Down here would have been the bottom of the actual 2018 bear market. Down here would have been the bottom of the echo bubble bear market. And over here would have been the bottom of this huge 50% sell-off on Bitcoin before it moved up, 70% or whatever it's been, 70. Well, we won't count the middle. We'll count this low back here, about 68%, right? Really, really good places to go long. Now, are you going to use that every single day in your trading? Obviously not. Over the course of the last 3 years, there's basically 5 different times where that came in. But it's still something that I would highly recommend keeping an eye on. And this is just super basic TA, right? This is literally just plotting a zone of support, right? Or what some people would call a demand zone. And every time it comes down to it, we see that really nice reaction off of it. So again, very, very, expected for that move from, 28, 29K back up to this, 45 to 50K zone. I was thinking more 45 to 49. So I got just a tidbit higher than what I was expecting, right? Very, very anticipated. But now, guys, if you asked me in May how sure I was about that bounce, I would have told you I was at least 80, 90% sure, right? I was very sure we were going to get that bounce. If you ask me right now if I'm very sure we're going to get another leg down, I'm not. I'm not sure. Really not sure. I mean, every time I say 60-40, I almost cringe, like maybe it's 50-50, right? I'm really not sure. And so the best thing that I've found in my personal experience is when I'm not sure, just stay out of it, right? Now, I'm not talking about day trades. I'm talking about like trying to take a swing trade or a position trade. Just stay out of the way. And that leads me into my next point. Shorting Bitcoin on a position trade. Listen, I've done it. I've looked at the math on it. I've thought about the emotional impact it has on me. I've thought about the stress that comes with it. And here's my conclusion. It ain't worth it. If we look at this from a mathematical standpoint, now on day trading, it doesn't make any difference. On a position trade level, not at all the same. Because if I short Bitcoin right here, right, the absolute most I can make if it goes to zero is I'm going to double my money, right? That's the most I can make. I can double my money. Now people will say, well, you can use leverage. Look, we're going to compare apples to apples. If I use 10x leverage on a short, I can make 1,000%. If I use 10x leverage on a long, I have unlimited upside, okay? Think about this. If you long an asset, it can go up infinitely high. There's no limit to how much you can make, right? Your risk is limited because the furthest it can go down is zero. The most you can lose is 100%. But your reward is unlimited. On a short, it's the exact opposite. Your risk is what is unlimited. It can go up forever and you can lose hundreds of percent, even thousands of percent if you don't close it. But you're never going to make more than 100%. So from a position trade point of view, it makes very little sense to try to short Bitcoin. Now you can sell your Bitcoin, which is a little bit different because if you sell your Bitcoin, there's no rule that says you have to buy it back ever, right? So your risk is limited because you don't have to buy it back. But if you are taking a literal short on margin, you are required to buy it back at some point, and your risk really is unlimited, right? So I've thought about this a lot, and at this point, I don't know that I'll ever short Bitcoin again on a position trade, right? I had planned on shorting it when it got back up to here, and when it started acting weird and I started feeling more neutral, I thought about this a lot and thought, what's the point of this? Why am I trying to short this? Why is it so important to me to short Bitcoin? And the answer really came down to ego and nothing else. I can make just as much money on a day trade as I can on a position trade up here, right? There's no real benefit to me taking this trade. If I did take this trade, let's just say hypothetically I wanted to short this. Let's say that I shorted the close of this last weekly candle, what am I going to put my stop at? Let's say that I put it at the all-time high. Okay, I'm risking 33%. Okay, the most I'm going to make is went to zero. Again, is 100%, so about 3 to 1. That's not real great, On the flip side, you look at somebody that was long back here in March, and let's say that they had their stop loss down at the bottom of the bear market, which is how I should have played it, but didn't, right? They're going to have a trade that looks like this. Now look, even if they hadn't sold yet, right now they'd be up 19, almost 20 to 1. And up here they would have been up almost 27 to 1. You see what I'm saying? It's just not, it's not worth it. I'm going to have the exact same amount of stress on this trade that I'm going to have on this trade, but I have a lot more upside on this trade, okay? And if you go into a 5-minute chart, if a 3 to 1 is all you can get, why would I want to take a position trade and go for 3 to 1 when I might as well just take a day trade? Like, let's say that I played this zone back here. Let's say that I got long on this first breakout, which is not a legit trade. I'm just throwing something up here real quick. But let's say that I was super greedy and this thing broke out and I longed the retest. Okay, my stop's down at the bottom of the zone, a little over 2% stop. There we go. There's the 3 to 1. Now, did it hit it yet? No. Will it hit it? Who knows? Maybe, maybe not. Right? But that's all it has to do to make the exact same amount of money that I would make on that positional short. It just, I don't know. I don't know why it's taken me 4 years, almost 5 years to realize that it's just not worth it. It's really not. And same thing, if you're shorting this, it's perfectly fine to short this stuff, right? I am all about shorting an asset on a smaller time frame because, again, if I take a smaller time frame trade, let's just say hypothetically, I shorted this channel back here. If I can get my tools to draw here, right? Let's say that I shorted this. It's not the greatest example in the world. Let me go back. I drew this up in Discord and I'm trying to find, I think it was like that maybe. Hell, I don't remember. Anyway, it doesn't matter. Let's just pretend this was the channel. Let's say that I shorted right here, okay? And let's say that I shorted at the close of this green candle. Let's say my stop was this candle here, 1%. Okay, look at this. There's 3 to 1, right? And that's going to play out in a matter of a few hours versus weeks or months, okay? And on a smaller time frame trade, if this thing really shit the bed, I mean really, really just all of a sudden collapsed, you can get a lot more than, say, a 3 to 1, right? Let's say, like, for example, back here, that I shorted over here, okay, on this retest of this neckline. And let's say that my stop loss was right there, about 2% or so. And let's say that I managed to, ride this all the way down to the bottom for whatever reason. Okay, well now, look at this, 11 to 1. So yeah, I can short on the day trade, I can short on the 5-minute chart, and I can get those big 5, 10, 15, 20 to 1 RRs if I get super lucky on a trade, right? The potential is there. But on a position trade, it's not. It's not there in a position trade because your stop loss is so big, right? Depending on who you are. The way that I trade, my stop loss would be way up here. And how do you justify that trade, right? The answer is I can't. So, I just thought it was important to share that because I know I think a lot of people look at Bitcoin and think, I'm going to short it, I'm going to short it, I'm going to short it. I want to be able to, make some money in this bear market. I don't think it's the money. I think what happens is people get caught up with the idea of being able to claim that they shorted the top, right? That's what they want to claim. I shorted the top, I shorted the top. And it really is an ego thing. And at the end of the day, that shit doesn't pay your bills, right? That's not going to pay your bills. It's fun to brag about for a day or two, and then nobody wants to hear it, right? Nobody cares. They don't hear you brag about it anymore. And so it was all for nothing. Just something to think about, guys. Really, really recommend that you be very wary about taking shorts on a market that's volatile, right? I've done quite a bit of reading the last year from people who are, lifelong 30, 40-year veterans, and it seems to be pretty much common knowledge that shorting is for fools, right? Again, we're talking about on a positional type of level. We're not talking about day trading. Like in the stock market, instead of shorting a stock, what a lot of people will do is buy a put. And again, if you don't know anything about options, puts are much safer because you buy a put and you can't lose more than whatever you paid for that put, right? And a put it's kind of like a bearish bet. But overall, I hate to be like a politician talking out of both sides of my mouth, but right now I think that anybody who tells you they know what's going to happen with Bitcoin, either they have a lot more skills than I do or they're delusional, because this thing just looks like a coin flip, right? It really does. And so I will do what I have always done. I will hold some crypto in case it does continue going up, and I will continue trading the smaller time frames until I feel comfortable investing more money in it, which I don't feel comfortable investing money right now, but I'm not going to liquidate the crypto that I own. All right? So with all that being said, I did want to talk about one other thing today. I have decided, maybe, I haven't decided for sure, but basically I did this course a few months ago, Pancake Profits. One of the people in there was very interested in learning about trading stocks, so I gave him just a few really small tips, really. He took his first trade this week, made 65 bucks on it. It was a smaller trade. Took a second trade today, made 570 bucks on it. And so he's asked me if I'd be willing to do some videos kind of diving deeper into trading stocks and kind of elaborating on some of the stuff I was showing him. And I'm probably going to do that. But kind of like he suggested, maybe do a course and get other people to pay the $1,000 so it's a little bit more worth my time. Thinking about doing that. If you are interested in learning how to trade stocks, leave me a comment. Like I said, I'm gauging interest, and that will determine whether or not I shoot those videos. And all that being said, it's a long video, so I'm going to sit down and as much as I hate to, I'm going to sit down and edit this video, and I'll try to get it uploaded to YouTube hopefully today, September 1st, at the latest, hopefully tomorrow, September 2nd. And yeah, hopefully, nothing crazy happens before I get it uploaded. So this is James with Crypto Common Sense. If you enjoyed the video, give it a thumbs up. Make sure to subscribe to the channel. And of course, don't forget to leave me a comment below on whether or not you'd be interested in learning about trading some stocks.